Okay, so a lot of early investors or ambitious entrepreneurs, they want to obviously attain some type of asset. You know, that is really what generates wealth. So a lot of that comes in the form of property or a car, what have you. Some may actually attain a loan to do that, and this is commonly done through mortgages or some form of payment. And what that does over time, it actually starts to cripple the individual, because it's set up in such a way where, of course, there might be high interest. Of course, you're paying more than what it may be worth, and as you start to make these payments over time, it becomes more of a liability than as if you were to buy it outright, which is actually what a true asset is. An asset is supposed to immediately grant you some form of freedom, especially if it's in the form of a building, commercial, or home property, because it produces passive income as well through the rent and different terms of that nature. But it's very important, I think, for people to really take into consideration the consequences of trying to attain these assets through the form of mortgages and loans and things of that nature, because it can become too much of a liability too quick. And many people are in debt in America, especially default on mortgages, back payments on loans, things of that nature, in comparison to just buying it outright. And even if you do have to flip a burger for 15 years or sleep on a couch, at least once you do get to that point, you could save at your own pace and gradually get to that point of where you can just pay it all right there, and it'll be well worth it, rather than it becoming so stressful and become overwhelming in the form of a liability.